This podcast and every podcast is brought to you by Claypot. Claypot is a Cantonese-styled restaurant located at 58 St. Mark's Place. You should totally go check it out. Claypot is also now on Grubhub and Seamless, so peep that. You want to have some delicious Claypot cooking sent right to your door? Go for it. And today my guest is Brent. Brent and I actually met through Jiu-Jitsu, and in this podcast we talk a lot about wealth management and financial literacy, and what can be done to increase that, because, money's not the ultimate goal in life, but it definitely plays a very important part, and being able to manage that part of your life is definitely very important. So I learned a lot, and definitely knows a lot more than me, so it's always great to talk to him. So I hope you get something out of this.
Regardless of what occupation they're in, like planning for retirement and understanding finance is really important, because like you're putting your money to work for you, and honestly that is going to allow you to take a lot of time and do other things that you enjoy. Obviously if you like working, that's great, but like I feel like a lot of people work to try to retire as soon as possible, and learning how to use your money correctly is like gonna help you get there faster. Right, I feel like in school a lot of people are taught like math, science, English, reading, whatever, right? But like if you really think about it, a lot of the times it becomes kind of like a cultural thing where people just kind of make fun of it. They're like, oh yeah, when am I ever going to use this calculus equation? And like, yeah, the reality is, unless you're going to be an engineer or unless you're going to become a chemist, like you're not going to use like this chemistry equation. You're not going to use like that stuff is great to know, but like there's some things out there that should be taught that I don't understand why they aren't taught, right? Like how to do your taxes. That's like literally everyone has to do that, right? How to plan for retirement. Everyone has to do that.
Well, there's kind of like a market that's like out there just specifically for people who don't know those. You know what I mean? Like TurboTax, you could do it this way. There's like services that come up and rise to the occasion because there's like a deficiency in, I guess, the edge. Like when I graduated high school, I happened to be on the cutoff year where they started implementing and requiring people to take like a intro to financial literacy in freshman year. Mm-hmm. And I didn't take that class, and I feel like if I had been within that cutoff year and I was, actually I don't even know if I could fit in my schedule, but like,
yeah,
having that in your pocket even at the age of like 14 is like huge.
Yeah.
So I didn't know if your high school had that, or if that was something that you came to realize throughout college, that like, oh, it's actually like kind of important to know how to manage my fucking money.
Yeah, no, I think like personal finance, like budgeting, like, yeah, I think there are definitely services out there that help. Like TurboTax is one. Like recently there's been a rise in like robo-advising, which is literally like a type of service where you just stick your money in an app. Like they've designed these apps so the user interface is great, but you like put your money in these apps and they use algorithms to just allocate your money into like a diversified portfolio, and you just set it and you forget about it, and like they'll manage your money for you, right? And it's low fees. You don't have to like go hire a wealth manager, because beforehand it was kind of like it was either you were doing it or you had to like jump to the next bracket and have a wealth manager or a financial advisor, and that's pretty much just for like higher net worth people, and it's more expensive. Like, yeah, you have these kind of things, but I think having some knowledge, almost more of like there's twofold, right? Like one, I think the beginning is to have enough knowledge to use it in more of like in a risk mitigation method, and then like the next step after that is to use it in more of like gaining returns in excess of like using all these apps, right? So what I mean by that is you should first start out knowing enough to like not mess up and like destroy your future, right? And that can mean a lot of things, like budgeting the correct way, like planning for retirement early, using the correct vehicles to plan for retirement, and not being stupid, right? So I'll share a couple stories. Like I don't know if your parents did this, but my parents, like they started they came to the US in their like early 30s, and like my dad started out working in a laundromat. I feel like a lot of people have these kind of stories if they're immigrants. And like basically they're really poor, right? Like my dad was doing grad school, my mom just started like postdoc, and he's working in a out of a laundromat and like didn't have a lot of money, but once they started to get going, like it was probably around like, I don't know, early, like late 1990s, early 2000s, they started building up some money. And like you hear about all these like that was especially during like the tech bubble, so that's when like all the internet stocks were going nuts. Everyone was kind of like, you could literally just throw a dart at the Wall Street Journal, whatever tech name it landed on, it would probably go up 100% in the next like 6 months to a year. And like in those situations, yeah, it's not that bad, but like what happens is like people get really speculatively into the stock market, and like my mom's parent or friends would be like, yeah, you should buy this new thing. What does it do? I don't know, but like it's gonna go up anyways. And like they just started dumping like tens of thousands into like single stocks. My mom would tell me, she's like, oh yeah, we just dropped like 10K on this stock. Like this person who was also not in finance, just like I don't know, a doctor or like a scientist engineer, was like, yeah, this is gonna be a great stock. Dumps another 15K and like loses it all, right? And what people don't realize is like that like, I mean, obviously it hurts to lose that money like right now, but that also sets you back a lot down the road, right?
Yeah, because like even if you had to like save that money in a bank, that's still maybe not like 10,000, maybe it'll be like 11,000 after like a few decades or something, but it's still a substantial amount that you have lost. So
right, so I think the first step is obviously to learn more so you can mitigate your own risk, know what is not a good investment, so you can at least like save money in the right way, right? And then the next step after that is to start learning what places to put your money, how to invest it to make more money than like you would. Because if you really think about it, like there's the whole idea behind investing is this idea of like compounding interest and the time value of money. It's just like money right now versus money 10 years from now is different.
Because of inflation,
right?
And fluctuating markets. Like $1 today wouldn't be it doesn't have the same value as $1 from like the 90s. Right.
I mean, inflation's one thing, but just like as you gain returns, they compound, right? So what that means is you start with 100, you get 10%, you're at 110. If you get another 10%, you don't gain $10 at this point, you're gaining $11, right? Mm-hmm. So like it slowly builds over time. If you start early, right, which is why a lot of us should start as early as possible. Like you start in your 20s. Like,
I think the recommended was like 25 is you should probably have some kind of retirement plan in place,
Like there are stats, like you do the math, but like there are stats where like you can invest less yearly. So say you start like say you're 22, you put like $100 in every month. Like you will still have more by like 45 than someone who starts at like 30. Oh yeah, but putting in like $500 a month. Like something like obviously the math will work itself out, but like the idea is like you can put less, but you start out early and like you'll still have more at the end of it.
Yeah.
Right.
Yeah, for sure. I know that was like one of the like the returns thing was really the thing that really like what you would get back from your investment. I remember, and obviously I haven't taken as many finance classes as you have. I only have my bare bottom of the barrel finance 101. So look at me pulling this out of my ass. But I just remember that my professor had spoken about how like the baseball players or like celebrities, when they sign contracts, and they're young people like in their 20s, or so, and they would just be like, I want $25 million, and then they would just get that immediately. But then they would have like a wealth manager say, all right, well, live it up with $5 million. I'm going to take the other $20 million. We're going to put that in and like have a compound interest, so that basically this $20 million you can't touch, but you'll have like free $60,000 coming in every year for the rest of your life. Yeah, which is like unbelievable. Like, can you imagine if like that was your return? Like, it's not like, oh, I put $100, I get $10 back. Yeah. But it's just like, nope, I just sit on my ass and I get $60,000. I get $100,000. And I think that's something that people don't realize that system even exists.
No, that's what I'm saying. Like, people don't understand that, like, you literally don't have to do anything. Like, you put your money in, you could literally come back in 10 years, have done nothing, and made tens of thousands of dollars, right? I mean, obviously, you need to have a large asset base to
start with.
Like, this is kind of literally the definition of money, more money. Like, money makes money, right? But, yeah, people don't understand that you don't have to do anything. Like, just say you have, like, I mean, yeah, this is a bad example, but, like, if you have $10 million, right? Obviously, if you had $10 million, you'd be in a good place to begin with. But, like, you could literally just put that in dividend paying stocks, high paying dividend stocks, say they pay 5%, you would just have 500,000 of an annual salary doing nothing, literally nothing. Right? Obviously, you have to get there first.
Yeah, yeah.
But like the idea is like you can let your money work for you, and people don't understand. People don't. It's like literally free money, but people don't do it.
But there's also like a level of complexity with that money management. So like you said, like the stocks. I mean, would that necessarily be risky? Would you be able to lose money? Like, there's a whole bunch of variables, or is it like pretty concrete set and you're like safe?
I mean, I think that's again like the point to financial literacy. Like, once people become educated, right? I think a lot of people don't get into it because they're scared, right? They're risk averse. They're afraid of losing money. But I think once you learn more and more about how the markets work, like what certain financial instruments or securities do, like it's like with anything, right? Like I don't know, maybe I don't know how you felt before we started jiu-jitsu, but like I'm sure from an outside person's perspective, like, oh, that looks really scary. Like you're wrestling, people are like getting their limbs twisted, like someone's getting choked. Like it's scary, right? But it's more of like a lack of knowledge, lack of understanding. Like once you understand, like okay,
yeah,
like there's technique behind it, like it's actually one of the safest, if not the safest, martial arts.
Yeah.
Right? It's the same idea here. Like once you start understanding, like, oh, okay, like yes, there's risk involved, but if you're young, if you have a long time horizon, like you can weather that risk. Like there are a lot of things that once you start learning, it's really not as risky. I mean, everyone has their risk tolerance, right? But I think it's just a barrier to get over once you understand, once you have the knowledge, it's not as.
So then with like that's the main problem that we're basically kind of circumventing around, is that once people have an understanding of at least the syntax, that the problem of, financial literacy becomes a lot less complicated.
Yeah. Yeah.
And so what I was wondering was, because I've met with like a myriad of people who have different strategies. I personally like saving. Sometimes I splurge, working on it. But
come on, it's the fun.
But I've had some friends who do not believe in saving, and they purely invest 100% of what they earn.
Oh, you're saying like they have nothing in the bank account. It's all just in the market.
It's all in stocks, cryptocurrencies. How do you feel about that?
Well, that's what I'm saying. Like everyone has a different risk tolerance, right? Like what I'm hearing is it sounds like
I wouldn't do that.
I
would never do that.
A lower risk tolerance.
No. Like, because in my mind, I guess I like risk, but I don't like enough risk where it's like I'm going to throw my money out into like the stock market, but then like what happens if I get in like a car accident, or what happens if like my kid needs medical bills? Like I can't. It's harder and it's more complicated. So at least for me, it's easier to just like, okay, I know I have this amount in the bank,
Yeah. I mean, I think in general, it's a good idea to have some money in the bank, right?
Mm-hmm.
Like people recommend usually having like at least 3 months worth of expenses as like an emergency fund, right? But like to your friend's point, I think it's not the worst idea either, right? Because you're young, if you have a stable job that you're not planning on getting fired, like you have the time, right? Like say you plan to put that money to work for at least 10, 20 years. Like, all right, sure, the market might dip in the next couple of years, but like your time horizon is like 15 years anyways, right? It's going to come back, right? So I don't recommend putting 100% of everything, having nothing in the bank account.
Well, I think
it
stems like, from like a distrust of like, why would I put it in a savings account? It's not really going to do anything for me right now. Like I'd rather just put in like Bitcoin and just skyrocket up like 10,000.
Yeah.
I mean, again,
Bitcoin's one thing, but like,
Bitcoin is that's like.
But no, like I'm struggling with that right now. Is like I have money in the bank, but it's like, all right, say you get past that 3 month of expenses, 6 months, whatever. Like however many months you believe is like a good emergency fund, right? Once you get past that margin of safety, like is there any point to have money in your bank account? Like personally, I don't think so. Like get past that margin of safety, whatever it is for you. Like if you're young, if you have a stable job, like it's back to the point. Like literally, just you let your money make money for you. There's no reason to have that in your bank account.
Or you could just buy all you can eat sushi all the time.
I mean that too, right? Like
I'm losing so much money to this one restaurant, dude.
Dude, I'm starting to believe that like
what?
All you can eat sushi. I don't know. I'm getting pretty over the sushi.
Really?
Dude, I think I used to say sushi is my favorite food.
Oh, but when you splurge like that, yeah, I know.
Yeah, like you start to lose the interest in it, right? Like I feel like it's with anything. Like if you do it so much if you binge so much on it, you kind of lose interest.
Yeah.
Like when it's first like fresh and it's like new to you, you're like, oh, this is great. You gotta like kind of wean yourself on it. You gotta like make it small amounts.
Nah.
If you just do it,
Give me a whole fish.
like, you know what I'm saying? Like at the beginning when I tried sushi, like it was like, oh, like we'll go to restaurants like once in a while. So really like every time you had it, it was like really good.
Mm-hmm.
But then now you have it like every weekend. All you can eat.
You're welcome.
Like, I don't want to eat this anymore.
Yeah, we should take a break.
Well, not even that. We could just go to like better restaurants.
Yeah, we could go other places for sure. Kind of a rabbit hole, but just to tie it back with money, I've had conversations with people, and I'm curious what your thought is on this. Is that you will make a finite amount of money in your lifetime, and so you should save. But then conversely, I've also heard people say there's gonna be a tomorrow, and there's gonna be money in that tomorrow, and you know how to make it, so don't worry too much.
I mean, it's a math equation, right? Like, it's all... So, okay, I mean, to give you an example, when you use these apps, so there are probably two prevalent robo-advisors, Betterment and Wealthfront. There's a lot of new ones coming out, so Vanguard's coming out with their own, like Charles Schwab has their own, a lot of the big banks are starting to create their own. And what they make you do in the beginning when you're signing up is they just make you take, like, a survey, right? Oh, like, when do you plan on retiring? How much money do you plan on using per year in your retirement? What's your income right now? Like, what's your risk tolerance? They ask you all this stuff, right? They're pretty much they're just doing a math equation.
Mm-hmm.
If you plan on surviving until, say, 100, you plan on retiring at 70, you plan on using 100,000 a year in retirement, that's 30 years times 100,000, you need 3 million, right? So, to your question, it's like, do whatever you need to, right, to get to that 3 million by 70. Right, give or take inflation at that point.
Yeah.
That's all it is, right? So if you want to spend more money now, then you're just going to need to earn more later, invest more later, so you hit 3 million. Or you can save now and then earn less. Like it's just a math equation, right? Like however you want to hit that 7 million by 7 or 3 million by 70, that's all it takes, right? But then obviously in real life, it's a guess of like, when do I want to retire? It's a guess of when I'm going to die. I guess you can guess at how much you're going to spend. You're probably more accurate on that in retirement, but you also don't know. Like maybe you get to retirement, you don't want to spend that much, right? There's definitely like probability to it, but I think it's also personal preference. I think the greater message behind this is just you should at least know how to plan for it, right?
Yeah.
Like to give you an idea, like I think in America we at least have somewhat higher of a financial literacy. Like I worked in India for the Reserve Bank for a while. And a couple projects we did was on financial literacy, right? Because literally like over half of India didn't even have bank accounts. Like no bank accounts. Like to us, we have savings account, we have checking, like no bank accounts.
Is this a whole other
straight
money?
cash, like straight cash, right? And so forget about investing. Like they don't even have bank accounts. You don't even get like the savings rate, and the savings rate over there isn't like whatever it is, like under 1% in the U.S., right? It's like 4, 5, 6%.
Okay, that's huge.
You know why? But you know why? It's because the inflation rate is like 7 or 8%. So like, think about what's going on. If you don't even put it in the bank account, you're not even like mitigating it, right? Like inflation 7%, your savings from the bank account is 5%. You're still losing 2% a year.
Yeah.
But if you don't even use the bank account, you're losing 7% a year. So it's like the opposite of investing. You're just straight up losing money. And people just I mean, I don't know if they don't care. It's more they just don't know, right?
Well, I mean, it might also be the case that they saw that 2%. They're like, oh, why would I want to do this if I'm going to lose 10% and this money isn't on hand? Like, fuck that. Why don't I just keep the money and then spend it on the things that are immediately present?
Well,
like the
yeah,
funds
if
I
you
have
need
now.
it immediately, that's one thing. But, like, if you don't need that cash immediately, you're losing 7% every single year. And you're not putting, like, it's just the fact that they don't understand. Like, obviously to us, like, we're like, oh, inflation 7%. What that means is my purchasing power, like, to them, they don't, what's inflation? Why do I care it's at 7%? Like, that's what I'm saying. Like, obviously it's an extreme example, but, like, that's, like, where financial literacy really needs to be explained. Obviously, in America, I would hope I think the base is higher, but, like, it can go up, right? It should go up.
Well, I mean, it's not even just that. Like, I think some people don't find the idea of saving in a bank appealing. Like, some people just, like, you've definitely seen those, like, memes of people who are like, when I get my paycheck, and you're, like, balling it out like Conor McGregor, and then the next one is like, oh, the next day I'm going to have some delicious ice soup. Like, they just completely spent their entire paycheck on the weekend. And that just might be, like, a cultural You know what I
Yeah.
mean? Like we might just like ball hard.
I mean, I don't know. I feel like it definitely depends on the type of person you are. My mom would always tell me when she wasn't working and my dad was the only person working, like he would get the paycheck and the first half of the month they'd be living like kings, right? Like going out all the time, having grand dinners, parties. But the second half of the month they would have nothing. They would just like eat eggs, rice, and like they would ask their parents for money. Like, I mean, sure, like if you that's how you want to live, right? I mean, it's kind of like to the Jordan Peterson point of like you need to some degree you need to understand that like sacrifice today is for the future, right?
Yeah.
Like to how you want to balance that, where you want to be on the scale of that. I mean, that's your
preference. You
right?
have to figure that out.
But
What
like,
works for you
I think you should at least know that the option
exists.
of saving, and like within that, the options are, you know what I'm saying, like within saving, besides just putting in a bank account, there are like other options as well.
So then, where do you think would be like a good first step for somebody to get a grasp on like the syntax of financial? Like, if you were to Google like what is a stock, what is a bond, they probably get like Investopedia, right?
Yeah.
And then like people who are reading that, sometimes they're like, okay, well, I get what the word means in the first two sentences, but then the rest of the entire page, I have no idea what these other words mean.
Yeah.
You know, so it's hard. It's a very difficult thing to just like pick up randomly through the web. You know, it's a lot easier through a class where they kind of hold your hand and they walk you through like, oh, what is this? What is this? What is this? So how do you think that? I mean,
ideally, like you're right. Like unless you have like a real interest or a vested interest in like learning about this, it's kind of dry. Like no, like,
yeah.
Obviously, to me, like I
it.
studied it, right? So like there's a bias behind it.
Was your concentration in?
Yeah, I was finance. So I mean, so yeah, there's a bias of why I'm more into it than others. But all right, don't shake your head at me. But the point of this is like, regardless of the fact of what major, you still have to deal with this. Like, I don't have to learn engineering. I don't have to have a vested interest because I'm not gonna go build a building. But regardless, even if you are an engineer, you still need to know this, right? I mean, ideally, in the ideal world, I don't understand why we don't have like a personal finance class in high school or in college. Like we were required to take like career management classes, right? Like
I just
you didn't have to do
minored,
that.
so I like literally had bottom of.
I don't know, but like there are a
skeleton.
lot of like required classes, right? I don't understand why this isn't one of them. Like, why do I have to take humanities and like English, or like why do I have to learn the U.S. history in high school like 4 times in 4 different classes? Like, you know what I'm saying? There's you can slide this in somewhere. Like, you can't tell me you can't slide this shit somewhere in, right?
I mean, like all topics are pretty important. I think. I mean, like even with your examples with like English and history, those are still good to know, right? Like,
Well, no, I mean,
I'm not saying replacing it, but I get what you mean.
yeah,
that
it's not one or the other. It's more of like you can definitely slide this in somewhere. Like,
it should be held to the same value
Yes.
as we do with
Yes.
English, with
Yes.
history. Yeah.
Yeah.
Okay.
But like, okay, say you don't want to take the class. I think the best ways for the more tech savvy and the younger generations are to use these apps. Like they definitely make things a lot easier. Like, do you know what Mint is? No. So like Mint, Personal Capital, like great personal budgeting tools, great personal finance tools. Like you don't have to just like remind yourself, oh, like don't spend X amount, or like keep an Excel sheet or write it in a notebook or something. Like, it has an app, right? It links to your bank accounts, links to your credit cards. You can set your budgets. You can be like, oh, I don't want to spend more than $1,000 a month. Like 500 goes to rent, X amount goes to restaurants, X amount is just like miscellaneous, like buy clothes, haircuts, like whatever. Set that. It literally tracks everything, right? Obviously, if you use credit cards, if you use cash, it won't go in there. I think you can record it yourself, but if you use credit cards, all of it's there. There you go. Like, that's a great place to start, right? You can introduce self-discipline, you can introduce personal budgeting, and that's where I think it begins, right? And then you can start to learn about, okay, robo-advising, like the UI looks great. I don't need to know anything about investing. I can just kind of like be like, oh, here's my risk tolerance, here's my income, like you figured out for me. At least you're in it. At least you're in the market. You don't know what's going on, but at least you're in it. And by being in it, you start to care more, right? Like, I used to do day trading. If you don't have money in the game, you're like, like, I'll follow the stock. I'll read it. I'll read the newspaper. I'll read you don't care. The moment you have, like, money in it, you're like, shit, man, I'm checking this company's performance every 5 minutes. Like, I'm reading the news every day, every hour. Because you have skin in the game, right? So, like, I think for people who are just starting out, like, just literally pick those two things. There's very little barriers to entry. Because the whole UI, the whole app, the whole purpose is to, like, get people into it, right?
Right.
Use Mint, use personal capital to just start budgeting yourself, and then start picking up some of these robo-advisors. There are some nowadays that, like, they have the algorithm element to it, but they even have like a you can choose element to it, but they dumb that down. They're like, oh, instead of calling it these fancy things like stocks, ETFs, whatever, they're like, oh, do you want to invest in technology? Just like a broad thing. Oh, buy this like mutual fund. But they label it as just like, they label it these funny names like, oh, like future of technology. Like, do you want to buy that fund? That's not actually what the fund is.
Yeah,
like,
yeah.
The underlying things are different, but like to people who don't understand, it's like, oh yeah, I want to invest in the future of technology. Or like, oh, like social impact fund or whatever. You're like, oh, cool. Like, yeah, this doesn't invest in oil companies or like gun manufacturers. Yeah, great. Like, that's also a starting point, right? Like, you're starting to scratch the surface. You don't need to like do super deep analysis or anything, but like at least you start to understand like, oh, there are these markets to invest in. My money is invested, and then through there you can kind of get deeper and deeper.
I think the two main obstacles, and you definitely brought these up, the two main obstacles is even with these great like services and these great apps that are coming out that help you budget and save and manage your wealth, that you'd mentioned that it's a bit dry. You know, it's not for everyone, and it's like math-ish, but like
Yeah.
more math than math, you know? Or it's, I don't know, it's something that's like not very, very, very appealing to people, but we're all part of the economy. We all have to like,
Right.
you know, we all have a stake in it, whether we want to or not. So it definitely, I completely agree with you. It's definitely important to have some, at least a rudimentary understanding of like what's going on with your money. But interesting was what I found interesting was what you had said before. You mentioned that people were just undisciplined to even like take the
Yeah, I mean, to some
say,
degree.
yeah.
To some degree, yeah.
Which, okay, so then how do you think, well, what if that's like the problem? Like, what if that's the crux of the problem, is that it's not so much that like people don't understand it, but they're like unwilling to learn how to do it because it means, oh, I have to plan, and that means I can't like blow my whole paycheck and ball like a motherfucker on the weekend, you know? Like, what if it's just like an attack on their like lifestyle, you know? So I feel like it's a lot more, because again, with economy and stuff like that, you could say it's a great system and everything, but again, like basic economics 101, they teach you assume the person is a rational person, right?
Well, I mean, I'm sure discipline is somewhere involved in there, but I would still disagree though, because I think it's more of, again, a lack of understanding of the possibilities, right? Like, why do people go to college? You're spending all that money, you're spending 4 years, but it's because people have the knowledge and they have the understanding that like, okay, after that there's opportunity, right? Like, I can get the job, I can get a higher paying salary, I can do XYZ, right? It's the same idea. Like, if you don't know what you could be doing with that 1,000, then yeah, why not spend it right now? Why not have the discipline? Why not just like go splurge, right? But if you know what you could do with it and what you could have in 5 years, right? Or let's just use 4 for the example of college. Then like, it's the same thing, right?
But that's the issue though, is that like, I don't think even people who have graduated from college don't necessarily know exactly what they're doing, what they want to do. And you know what I mean? Like, you're kind of assuming that they're like, oh, I know exactly what I want to do with my money in like 4 to 6 years. Like, I know exactly what the amount is going to be. I know exactly how I'm going to spend it. And it's just like a lot of different variables. And I feel like there's a slight hesitancy, because it's like, I would even argue like your example with the college students, right? The people who do go to college, people change majors all the time.
Yeah.
Right? And then even after they graduate, they might work in something that's like completely different from their major, or they might end up just like taking a job that didn't even require a college degree. Is that to say that the money was wasted? It depends on like how you interpret it. I would argue no, because I think those 4 years are invaluable experience. You know, like, it doesn't matter what university you're doing. The fact that you're removed from your parents and you're living and you're forced to cooperate with other people your age, you're treated as an adult, you don't have to do like bathroom passes or anything like that. It's a whole new world. But I think that opportunity and that big open question kind of freaks people out.
Yeah, yeah.
And so I think it's harder for people to act in a disciplined manner when they don't necessarily have that goal in mind.
I mean, the difference here is like, right? Like, what you're talking about with school is more of a set track. Like, okay, like if I go down this road, there's an opportunity cost. There's multiple opportunities cost, right? Like, I can't, if I want to go be a doctor, I can't be an engineer, or it's going to be harder for me to retrace and then go be an engineer, right? And so I think it's kind of like analysis paralysis, right? Like, not knowing what to do right now because there's too many opportunities. That's not quite what I'm talking about. I'm saying like the idea of like not having discipline to invest is just it's just a two-sided, like, it's one or the other, right? It's like you're saving now or you're investing to have more in the future. Like, there's only like one set opportunity cost, right? Because money is, you could do anything with it, right? You can in the future spend it on school, you can in the future spend it on a car, or like splurge. So like having more or less money is not like the same as like too many different job opportunities or opportunities go to different, you know what I'm saying? Like, it's a little bit different.
But no, what I was saying is like maybe the reason why people splurge is because they don't necessarily have like a better like vision to like
Right, and I'm saying regardless of what your vision is in the future, more money pretty much in all situations is better than less money. So like you don't need to have a set goal or job in mind in 10 years, but like either or, having more money in the next 10 years versus less is still going to be good. Right? So that's what so I think regardless of what your goal in the future is, like excess of some sort of like margin of safety emergency fund, there's no reason you shouldn't have some money in the market, right?
Yeah.
I mean, okay, there's a lot of caveats there, right?
Yeah.
Obviously, like health, family, like it's not just you, but I think if people knew more about it, like there wouldn't be a reason to, right? Like if you went around asking like elementary school, high school, middle school kids, like why they would go to college or why wouldn't they go to college, like most would say, yeah, like I would, if they had the option, if they had the money, like I'm pretty sure most people would want to go to college. It's the same thing here. Like if you told most people like, oh, like this $1,000 in the next 10 years is going to be 5,000. Do you want to do that or no? Most people would be like, yeah, sure.
Well, no,
like,
that's not necessarily true. Okay, this is interesting because this is kind of similar to, there was a class that I took with in Euro, right? And it was like a very short, like one lecture had a very short section on like the like decision making, like neuroeconomic decision making, and you can measure that through like rats and like what they would choose and stuff like that. But what was interesting is that the context of what you're gaining versus what other people are gaining severely affects whether or not you will make that decision. And so an example of that would be they would ask people, hey, if I gave you $1, like if there was a person here, there's a moderator, and they're like, hey, Brent, if I were to give you $1 and Stefan also gets $1, you'd be cool with that?
Mm-hmm.
Cool. Hey, Brent, now I'm going to give you another $1 and Stefan gets $100. You cool with that?
Yeah, I mean, I know what you're saying.
But
yeah.
yes, and then like a lot of people are like, whoa, no, what the fuck? Why does Stefan get 100? Like, fuck that guy. Yeah. And then, so like comparatively, I definitely feel that there's a sense where people won't necessarily be planning straight ahead for like, oh, 5 years from now I want to be like have that $10,000. They might be in a position where they're like, oh my god, like all my friends, they're like doing like so much better. They could go to all these upscale restaurants. Like I need to like go with them too. Like, you know what I mean? Like it's hard because there's a whole bunch of like this complex social web that we're in, and we're trying to find our place in it. And I'm just saying, like logically, yes, you're right for sure. Like,
yeah,
save money,
it's just logic.
Like, but it's hard, is what I'm saying, and it's like how do you fix that kind of
Well, that's what I'm saying. I think we're going in circles, but like introducing more of this knowledge would not be on a one person scale, right?
Yeah.
Ideally, it would be at a larger scale. And I understand what you're saying. Like, if you're the only one doing it and the rest of your friends aren't, then yeah, like you kind of have more incentive to splurge right now. But the idea behind this is if, like, on average, like everybody had more of this and everybody was starting to invest more, then like you would join as well, right? Like people do not choose to not go to college because like they're like, oh well, some people are staying behind and partying instead of going to college. Well, right? Everyone goes, but that's because it wasn't always like that. It definitely was not always like that.
Yeah, it was definitely not always.
So there was a wave, right? Like you get more and more people to be like, yeah, higher education is the way to go, and then the wave comes, stragglers get left behind, and like there you go. It's not even a choice for most people at this point. It's like, no, I'm going to college. The same idea here, right? Like, yeah, for now, people who don't, when you have less understanding, people are like, yeah, like why not just splurge right now? All my friends are doing it. They're going on vacations. I mean, not saying don't do that, but like as you increase the level, more and more people will start understanding, more and people save, right? Like it's the same idea,
yeah,
I think.
I understand. Yeah, I get what you mean. That makes a lot more sense with that example of because like people used to not go to college like all the time, and now it's almost like a standard thing where you'd be like, of course I'm gonna go to a college. Like I have to. That's the next step after high school. Like what are you talking about?
And like I think people nowadays, again in the U.S., like most people do already save. Like people still go on vacation and they save.
Yeah.
I like what we were just talking about was more of an example of probably more for like developing countries, that idea, but like I still think the bar can be raised even from where we are right now.
Yeah, and that, now I would agree with you that like even if you raise raise the financial literacy bar, and maybe only like 12% of those people who were, went through that course or whatever
Yeah.
method you have of implementing that, no, maybe only 12% of people actually like take the initiative to be like, yeah, I'm going to do this. But that's still better than nothing. So I definitely see the value in what you're saying, that it's
Like I wish I had some stats here, but like there are some scary stats if you knew like X% of like Americans by retirement like don't have enough money, or like X% of like people like there's a lot of stats.
well, there's a lot of
right?
misconceptions too. Like I have friends who think that like, oh, Social Security got me.
Yeah,
I'm like, that's a
what I'm
joke.
saying,
You're gonna
right?
get like 34 cents. Are you serious?
Yeah.
You're not gonna get anything.
Yeah, like a lot of it's almost. I mean, I don't want to say epidemic, but like a lot of people in America, which if it's America, man, if that's in America, a lot of other countries could be worse off. Like a lot of people in America, when they get to retirement, like they won't have enough. Like they won't have enough between when they're alive and when they die. There's not gonna be enough, and like people, if you get to there, that's. I mean, partly it's your fault, but I guess what I'm talking about, partly it's like this is like system's fault in a way too. Like you should have known.
Yeah.
You should have been taught that.
Yeah. It's not necessarily purely on the individual. Like it would make sense to have it incorporated into the system to make these people like literate and that makes sense.
One of my goals in the future, I work in finance now. My goal I don't know. I don't know what's gonna happen, but at some point I wanted to go back to university and like teach, partly somewhat related to this goal. At the same time, I knew a professor. I took one of his classes in school, and like he taught, and at the same time he was like a wealth manager, and like what that just means, like you're a financial advisor. You have clients who like give you their money, and you manage it for them for a fee, and he would do that in conjunction with being a professor. And I always thought that was really cool. Like I would consider doing that in the future. The caveat is like I would only do it for people with like, usually it's the other way around where you have to have at least some amount of money for you to be my client. I want to do it the other way around where it's like you cannot have above some amount of money for you to be my client. So I also worked at Goldman 2 summers ago in private wealth management. That just is a fancy word for meaning like you need to reach some threshold. Right? There's like buckets. Like you can be ultra high net worth, like 10 million and above in liquid assets. Not saying like like not saying your car plus your house plus everything is 10 million. No, like in your bank account, liquid, you have 10 million. That's like absurd.
You can get it cash like that.
Yeah, absurd. Right? That's like ultra high net worth. You have high net worth, which is like 1 million to 5 million ish, right? Then you have like the wealthy people who are like in the 1,500,000 range. You have mass market, like 250 ish. Like your lawyers and doctors, like 250 probably have some offhand, right? And then you have people who are like the commoners who probably like 50K, maybe less, like 20K. After working in the industry where you're literally just servicing like these ultra high net worth people, I'm like, you don't need me. Like, are you kidding me? Like, if you had that much money, like I would hope you knew something. Like, I shouldn't be holding your hand and managing your money for you. And what people don't realize that like wealth managers are not even just like managers at that point. They're almost kind of just like the bitches for like rich people. So, like you get to know them, you get to know their family, their dogs. Like they make you do weird things. Like half of it's like tax evasion, half of it's like, oh, like can you like negotiate with this yacht seller? Like I want to get it to a lower price. Like you just kind of do shit for them that's like related to their finance. In addition,
anything with money, they basically throw it at you. You're their money bitch.
Yeah, exactly.
You hold their pocket.
There was a story I heard while I was at Goldman where literally like you also suck so much dick, right? Because like these clients, no, I'm serious. All right, tell me if you had $50 million, the world is your playground, right? Like, all right, you don't want to like you don't want to suck my dick, I'll go to the other bank. You don't want to suck, I'll go. Like there is endless amount of advisors who are like, yeah, fuck, sure, I'll manage your 50 million. Because what you don't know is they take 1% of the 50 million annually, right? They get a management fee, so like, yeah, of course I'll take your money. Like that's fucking money to me, right? So all the advisors are fighting over this, like the clients, right? So literally a story I heard was like in the middle of the night, I get a call from a client in like Switzerland being like, can you fly to my house tomorrow? My car is like broken down in my garage. Can you help me fix it? Manager straight up bought a flight, like on his own budget, to Switzerland the next day. Got there, and like he got this, like, obviously the mansion and shit. It's like, where's your car? It's like, oh, it's not broken. I just wanted to see if you would do it. You're hired. Like, it's to that
Whoa!
point. It's to that point. Like, dude, it's a buyer's power is like out the roof, right? If you don't want to manage my money, fuck you. I'll go somewhere else. Like, so if you're the manager, you do literally anything. I mean, like, you're not gonna do it for 1 million, right? But like, if the client has a lot of money, fuck yeah, you do anything, right?
That's a rough
like, would you fly to Switzerland for
for
$1 million?
No, dude, I can't even fix a car. Are you serious?
Well, but you know what my point, right? Like,
I thought I was gonna show up and that asshole would be like, "Oh, I was to say if you there, I just bought a new car. You want this old broken car?" Like, whoa.
well, no, but like, think about it. If that client had $100 million, if you won those assets, one, it's not always 1%, but just for math, right? That's $1 million a year right there. It's money for you too.
Yeah, it's.
Right?
I understand the appeal, right? As
But,
a
like,
wealth manager,
you still have to be a special person.
You are
to do that
yeah.
shit, because you end up kind of being like everything, right? Like, no surprise, those kinds of families that have the money probably aren't always a good family. Like, cheating on the whatever. Like, the kids are crazy. Like, they're all like, they want that money when their parents, like, you end up being like a therapist for them. You end up being like a lawyer for them. Like, it's a weird thing.
It's a weird relationship. Yeah.
And like, I did that for a summer, which is not even that long, and I was like, yeah, fuck that. I'm not doing this. Like, I'm not that kind of person where I can be like, yeah, I'll take this up my butt, and like, I'll sell my morals for money. Like, that's literally what it is, right? You just like forego being a good person and like your morals for like, yeah, I'll take a commission 1% off of like a couple $100 million base. Yeah, I'll do that. I mean, I can't be that kind of person.
Okay, well, I'm glad you found out like way early on that you're not about that.
Yeah, but the opposite is this, right? Like, for them, it's easy. Yeah, you only need a couple clients with a lot of money to make money, right? The opposite is, yeah, if I want to target like more of the commoners, I can't just have one or two, right? I need like literally hundreds to create some sort of base.
Yeah.
In order for me to make.
But
a
I think
living.
that idea. I think you're onto something. Like, does that exist at all? Is there like an
like, no, right? Because, again, before the robo-advisors, there's kind of like a gap. Like, it was either you just figure it out yourself, or you have to have enough money to go to a wealth manager.
Mm-hmm.
But you'd have to have enough, right? Because, like, A, some don't take you, B, it's expensive. But the robo-advisors kind of, like, made that, it bridged the gap a little bit. So now you and me, like, I use it. Like, you and me, you don't even have a lot, because the fees are really small. There's really no touch points. It's just that it's an interface, right? But, like, I think there's more to be... Like, there's more of a gap to be bridged. Like, the problem with robo-advisors is when things are going great, or if you know a little bit about the markets, it's like, it's not a big deal. Like, things go down, you're like, oh, well, I know why, it's going to be okay. Or, like, in general, you just kind of know what's going on, so you don't have to worry about it. But for a lot of people, it's like, okay, say I put my money in it, things, like, just take a dive down. People freak out. They want to call someone. They'd be like, what's going on? Like, explain, right? Like, if you don't know anything, who's going to explain to you? No one's going to explain to you. It's a little bit... There's definitely still a bridge to be gapped. So, like... Or gap to bridge.
gap to be bridged, yeah.
But, like...
A bridge to be gapped. We got to break all the bridges, Brent.
Yeah. But, like, I think in the future, I would totally be, like, down to just, like, manage money for people who are, like... Who literally don't know anything, who do need you to help them get their wealth to like, increase their wealth. Not for, like, stupid purposes of like buying a yacht or like to pass it down to their spoiled kids. It's like, no, like, I actually need this money so I can send my kids to college, so I can like move out of this damn neighborhood and go to somewhere better. And like that, those kinds of things, right? Like, you're both being a professor in a sense of like, or not even professor. I used to think about it as being like a doctor, right? Like, you go to a doctor and you say like, oh, this is what I'm feeling, this is what I need, like, prescribe me something. It's the same idea, right? Like, tell me what your symptoms are. Okay, I have 4 kids, this is my income, like, I would like to have this amount, or like, I need to consider these things for taxes. Like, here are your symptoms, I prescribe you something. That's what you're doing, right? You're like a financial doctor. And like,
I like that. Financial doctor.
Right.
MD, LLC, Incorporated.
Because like, in the future, I'd want to be a professor teaching, and then at the same time do something along this line where it's like, you're like, quote unquote, teaching, being a doctor-ish, consulting, whatever, but like I don't know, to some sense it's like for good, right? Because I feel a lot of people have this perception that like, oh, finance is like pure greed, which honestly, after seeing the industry undercut, like,
But you've seen like the tip of the spear, you know, like it's just because it's the way that it's exercised with those people who have like stupid buckets of money. I mean,
well,
they have a silly lifestyle, you know, like you can't.
no,
Who can buy a yacht on
You can't
it?
even imagine.
You can't. So,
that level of wealth.
but I think that what you're getting at is that there's a almost like a negative connotation with finance, as if it was like, oh, it's corrupt,
Yeah.
you know. But it's
But you can
it's-
use it
yeah,
for good.
you can use it, yeah.
finance for good,
you can use it for good, and you can
and
definitely.
that's what I'm trying to say. Or
Well,
do.
that's a complicated problem, and how you work that out is
Yeah.
that's. I mean, definitely keep me in the loop. I'll love to hear about it, but
Yeah.
that sounds really difficult because, like, I guess in my mind, it sounds almost along the lines of like a nonprofit where you would like take on like a bunch of because like
Yeah,
what would the
yeah.
returns be? Like, how would that be sustainable? Like with
No, that's what I'm saying. That's why I would do this later on when I hopefully have some level of wealth to like sustain myself. / the teaching, right, would help, because like yeah, you're right. Like say again, it's the 1%. Like you're not gonna have enough. Like if you manage like $1 million, you get 100,000. But like to get to the $1 million using clients that are only like giving you like maybe 50K, like you need a lot of clients at that point. And there's definitely a limit, right? Like you can't manage 500 clients, and you just can't. So like say I can only take on 50 to 100 at once. Yeah,
What-
like it's not sustainable. Like you would need some sort of model where it's like you are losing money over time.
But what if you were able to, like in the same way that you could diversify what you invest your money into, like several different kinds of stocks, like your retirement fund, right? You could have like 40% in like high risk and like 30% in like medium risk and 30% in like long-term bonds, you know? So it's like you have a very diverse thing where it's, okay, you're taking some risk, but not enough that you would lose everything. What if you were able to segment your clients in that same way where they would conglomerate their money into like a $500,000 wealth that you would manage, and then you could segment that down back.
Oh,
to,
what you're talking about is just a mutual fund.
is that really is?
That's what a mutual fund is. Like,
Oh, I'm really dumb.
like you put.
but like, do mutual like?
Well, but the thing about a mutual fund is it's a one. There's only one mandate, right? Like, say this mutual fund is like a large cap technology fund. Like it only buys large cap tech stocks. But the idea of the mutual fund is like you put $10 in, I put $10 in.
Yeah.
Another person puts $10 in. Cool. Now the portfolio manager has $30, right?
To actually manage, which
Right, and then
has a lot
and
more
then
flexibility.
Yeah, and then they'll distribute the earnings 3 ways. That you're describing a mutual fund.
But could you do that on like, or use that similar model to do what you wanted to do, where you would manage people's not specifically just towards technology, but like,
I mean, I see what you're saying. Like, I think to some degree you could, right? Like, where the issue lies is, I mean, back to the example with the high net worth people. Like, the whole idea is like customization, right? Like, you come to me
I see what you
as
mean.
your patient. You give me very specific symptoms. Like, not everyone has a divorce thing going on. Not everyone wants to make a trust for their 4 kids. Like, there's customization. That's why they come to you, right? Otherwise, you could just use this robo advisor where it's completely standardized. Everyone kind of gets the same
thing, yeah, same
right?
package.
But to your point, you could probably also segment it. It probably doesn't need to be like a person-to-person thing. Like, probably for this group of people
Who are interested in technology
Right.
and want more
well, no,
risk.
not even about
No?
technology, but like this type of people who are like in somewhat the same socioeconomic standing, somewhat same future goals. You can make this kind of portfolio for them instead of one by one, right? You could do like a portfolio for 20, and then okay, in a slightly different cluster of people with a slightly different socioeconomic, slightly different like risk tolerance, you could do another one. So, I mean, yeah, actually that's a good point. I never thought about that. You could diversify. You could make like clusters of portfolios in a wealth management fashion instead of one by one. Because yeah, 200, 100 people is too many. But if you split that into 4 groups of 25, that's not so bad. Yeah, that's actually, I never thought about that. That's a great idea.
Thanks, man.
Thanks, Stefan.
Well, I
appreciate
hope that you can use it, man.
No, honestly, that would be a revolutionary model. I don't actually know if anyone's. I can't.
Oh, so we should like totally kill this podcast and just keep it for ourselves, right? Like that's.
No, I'm serious. I mean, maybe I've been out. I mean, I'm still young. I don't know
Yeah.
the industry that well, but in my mind, I don't know any industries or any wealth management platforms that do that. Because most people do focus more on. They want the customization. They want to know that like, oh, this portfolio you built for me is just for me, right? I mean, obviously we have to do some testing to see how you can bucket people, But I'm thinking if you use like more of the mass market kind of people, you could probably create buckets, right?
Yeah, I can't imagine that
Like when you have 50 million, yeah, it's going to be harder to create buckets between people who have 50 million.
Yeah.
But when you're talking about people who just want to invest 20K, you could probably create, like between you and me, we'd probably be in the same bucket.
That's what I'm
right?
saying. Yeah, like I would totally invest in the same bucket with you if some like wealth management guy who's like done sucking some dick came by and was like,
Yeah.
hey, you guys
Yeah.
want to put money together and add together to make 50 million and then we'll
Yeah.
just like do this? Yeah, sure, why not?
But I mean, I guess now that I think about it, the value add is a little bit weird because it's like, why not just, that's basically a mutual fund-ish. Like you're beginning to create a hybrid between like a mutual fund and wealth management because it's like, you know, like why would I not just put, like two of us could just put money in the same mutual fund that Vanguard does, or we could use wealth management. I don't know. We could think more about it.
But I mean, okay, but it's also just like the context. Like maybe there's distrust in Vanguard, or maybe because it sounds like to me that you're trying to almost like reach out to these people who.
Yeah, I think the teaching element would also be a differentiating point. A lot of wealth managers, like, they kind of just do the job, right? I think what I picture it to be more of is like managing money, but like I'm also trying to wean you off of it, like teaching you how to fish instead of giving you the fish, right? So again, maybe that's like, I mean, I need to think about this more, but like again, the whole idea is like I don't accept people who have more than a certain amount of money. Say like I start you when you're at 50K. When you get to 100K, you better know how to manage it by yourself at that point because I taught you and because I got you there or helped you get you there. But after 100K, you're out. Like you do it yourself. You should know at this point, right? And then I'll cycle through like that. Like it's classrooms almost, right? It's like a class of 20 people. I'll take you all. I'll get you guys to the next wealth bracket, whatever you want to say. But when I get you there, you've graduated from my class. You better know how to do it yourself. Yes, I've helped you there. Like yes, I've managed money. I've taken a fee. But like you should be able to do it now, and I'll take the next class of 20 people. That's actually, I mean, that's an idea too.
Yeah, I love that idea.
Right? Because then it's like,
but that would only work if there was like education along the way.
Yeah.
You know, you can't just raise like random people's money to like 100,000. Like, good luck, buddy.
Yeah,
See
like,
you later.
That's what I'm saying. Like, but that's what I want to do. That's the whole point of this, right? To like help financial literacy, help the people who like actually do need the financial guidance and advising. Not these like millionaires, right? And then hopefully afterwards they'll be able to fly on their own.
Yeah.
I don't know. It's kind of like a reverse Wall Street, like fuck yourself kind of system. Because you'd be surprised. Like when you go into like finance and banking, like the culture is like very, very like. I used to be very like naive about this. I used to think, oh, like it's not like the 1980s, like it's not like the Wolf of Wall Street times anymore, like it's different, it's gotten better, which I mean to some degree it has, right? Like it's definitely not quite that bad, but it's still pretty bad.
The culture's still there, and that might honestly have to do with just like again, you it's like a war, you know. It's
yeah,
you know, if you don't want to suck my dick, then this guy's gonna suck my dick, and I'll just hire this guy instead. So it's like it's intense, like yes, no, very fast negotiations where you're either a millionaire or you have nothing.
Yeah.
And so I can understand why those high stakes would stress people out, but like try to be less shitty is the moral.
Like it's sad though, because you see a lot of people go into it who like some love the chase of money, right? Some people truly think money is like what brings them happiness. Maybe that is what brings them happiness. Great. But you also see a lot of people get sucked into it where like they know deep down that money is not really what makes them happy, but they just kind of go through the motions because they got sucked into it. They're in the crowd. They can't get out. It's like a stampede. They can't get out, right? Like I've talked to freshmen I used to be in the finance club. I mean, yeah, I know, sorry. That sounds super nerdy.
No.
But like I used to be in the finance club and like that was pretty much a freaking like fraternity at that point. But like you would see freshmen come in, like fresh grads from high school, and like they're all nervous to talk to like the executive board members, basically just seniors who did an internship at a bank, who have like a return offer to like a first year analyst where you basically are a bitch anyways at that bank.
Yeah.
But they talk to these people like they're fucking gods, and they're like shaking. They're like, what did you do at Goldman? And I'm like, oh my God, calm down. Like I'm just a person, or like these people are just people, right? But like you talk to them and they're just like brainwashed. They're like, yeah. I came out of my mom's womb thinking I wanted to do banking. Like when I grew up, I like watched Wolf of Wall Street like 10 times. Like I started reading finance books when I was 5. Like this is what I wanted to do since I was like a teenager. I'm like, shut the fuck up. Like you don't even know what it is. You don't want to do that. Like please, like don't be like this.
I think that's also just like that's kind of like the kiss ass, right? Like they just
Oh
want
my
to
God.
be what they think you want them to be. And they're just
It's
young.
terrible.
Dude. They're
No, but it's
they're
terrible.
18, bro. They don't have their identity formed yet. Like
I think in finance it's accentuated. Like
yeah, I could see that.
When have you seen that at a comp sci thing? You would never see that at a comp sci like career fair. People would just be like, yeah, no, fuck you. I have my own startup. Like no one is like tunnel visioned. No one is like all funneling to the same 4 banks for the same one position. Like I don't know. Maybe they are. Maybe I don't know. Maybe I'm not in those industries.
Well, it's definitely cutthroat. But I'm glad, and I definitely can see this in you that like you're definitely not one of those people that holds money as like, oh, this is my top value. Like it's you
like
see
have I
the
thought about it? Like I have, right? Like
But I can tell that you see the utility, and I mean the fact that we've been talking about like financial literacy means that you see money, you understand its value, and you see the use in it, and what it could mean, right? The potential for actually managing your money well. But I can definitely tell just based on your mission and the fact that you don't like to just fly to like Sweden and fix some guy's fucking car, that you don't give a shit about the money in the end, right? Like it's important, but it's not your goal.
I mean that's what I hope. That's what I think. And like we'll see, right? If you call me in like 30 years and I gave up on this, then yeah, maybe I was wrong. Cuz I mean, look, money is tempting, right? Like especially at our age, when you see someone else get a promotion or like go down the banking track, yeah, you tell yourself, you're like, yeah, they're working 120 hours. Oh yeah, their life is miserable. They're like blah blah. But then you see how much they're raking in, you're like, fuck, maybe I should do that too. Like it's always tempting. Like I'm not gonna lie, I've thought about it, but like I try to tell myself, and I do believe that like there's more value in like other things besides money. Like sharing this knowledge. Like I've always liked teaching, and that doesn't even have to be finance. Like I taught tennis. I used to teach piano. Like I've tutored for like subjects in school, and like I don't know. I think the sharing of knowledge and like in this case financial knowledge is to some degree I think more important. Like I mean, I don't know. It's pretty cliche. Like oh yeah, helping people over money.
That's good.
Like
though.
I don't know. We'll see.
But I like that you've been able to identify this issue, and it's not just like a naive identification where you're like, hey, the system's fucked up. But that you actually present that, oh, well, this is kind of, I understand this system. Like, I worked in finance, and I think that your perspective definitely sheds some light on what could actually be done. Like your whole outline of educating people and then hitting that, oh, you're at 100K, I'm going to cut you off. You should know, you can walk on your own 2 feet. This is kind of like the training wheels. Like, the fact that you've already, like, conceptualized that just shows that, like, I really feel like you're meant to be a teacher, man.
Dude, I mean, that's what I wanted to be, like. But I felt like maybe going into the industry first and learning the ropes, seeing the inside, and then coming out and teaching.
Yeah.
But like I don't know, we'll see.
Because at our age, if we were like try to teach anything, unless you've been like doing it, unless you've been an expert and like a world champion since you were 3, no one's gonna give a shit. Like, what have you done? So, and okay, fair enough, but
it can be done.
It can, I think that people our age are still creative enough to come up with like weird, like I mean, we just came up with a weird idea. Whereas,
I mean, I've thought about it like to some degree, starting even now, like creating a YouTube channel. Like, there's already stuff online. There definitely is stuff. Like I looked it up myself. There are YouTube videos, like Khan Academy does some of this stuff where you just explain like basic finance stuff. I've thought about creating some sort of channel where it's again like an outreach to try to like broaden or try to increase financial literacy. I haven't put that much thought into it, but like that's an idea too. Like a way to start early instead of waiting until I become like more like I don't know, recognized and be like a professor.
I mean, I would definitely recommend that you like start it in your free time, like now. No, okay.
Think about it. I'll think about it.
Because like, okay, let's put this in the context of like jiu-jitsu or piano, right? If you got but if you got famous and you're like amazing at like finance and stuff like that, then like out of the blue you start doing it, like and let's say you start like an online university or maybe a YouTube channel or something. It's a different medium, You still have to kind of get used to it, and even if you have had experience teaching, like teaching financial literacy to people who may or may not be open to the idea of participating in the financial market, that's a challenge all in itself. Yeah. And I feel like if you can start kind of getting the ball rolling, it would you're building your competency over. Like Imagine how
This would
good.
I would be like a blue belt, like a beginning one striped blue belt trying to start this. Though.
It all
I don't
goes
know
back
if,
to
I don't know if I want to
jiu-jitsu.
like wait until I'm at least a purple or something. But I don't know. I mean, no, you make a good point. I've definitely thought about it.
Well, I mean, I'm all in support of
Yeah.
whatever you choose to do, but I'm like, I'll take your class, man. You want to manage my money?
My mom's already told me this a bunch of times. She's like, "Oh, I just manage my money." Like, I still feel like there's a lot to learn from me too.
Yeah.
Um,
Yeah, but that just comes with life and with experience.
yeah.
And then that's the trade-off, right? You lose your ability to be literate in the new technologies, in the new systems. But the trade-off with that is that you've lived life and you
Yeah.
have the experience behind it. You kind of understand like the human element behind it.
There are some stupid ways to make money though. Like sorry. Like when you know more, I think this is more of like the second half of what I was saying. Like with the first again being the risk mitigation. Once you start learning more and more, this is like deeper in, right? Like you got to get to like I use jiu-jitsu, but like you got to get to more of like the purple brownish levels where you start learning like the weird wrist locks or like the weird like it's not your fundamental things anymore. But like again, it's like once you get past a certain threshold, like there are stupid ways to make money that like shouldn't exist, that don't make sense. But like people who like haven't scratched the surface or are like unaware or like don't know finance will never be able to tap it, right? So to give you an example, there was a product that I worked with at Goldman where it's called like a structured note. I'll
Give me the spark notes. Yeah.
yeah, I won't break it down in what it actually is. It's like a bond with an option overlaid it, with two options overlaid it. But basically what the payout process looks like is if it goes down, so say you start at like, so you say you start flat, right? Say the product loses money, it goes down 10%. From 0 to 10, you're covered. Like it goes down 9.9999%, and like the note expires, say there's like a 1 year expiry. Say over 1 year it lost 0.9999% or whatever, like close to 10, you don't lose any money. You're flat, you get all your money back. You put $100, you get 100 back, done. If you lose more than it starts going past 10, you lose it at a slower rate. So it's not a 1-for-1, right? So say the market goes down 1%, you lose 0.75%.
Mm-hmm.
So it's like
Cushioned as hell.
right, there's cushion, and it's like past the cushion it's like less than what the market's losing. Now on the flip side, when you go up, it's not 1-for-1 either, but it's the flipped. It's leveraged. Like market goes up 1, you go up 1.25.
Wait, that's so stupid. How can that be right?
Right? But here's the catch. Like you only, it's capped. You can only go up to like 25%. But okay, let's be real. Like
But 25%
25,
is
like
still
oh
a
no,
lot.
like
That's
I didn't get 50, I got 25. Obviously, for some people, it's not the right product, right? For some people, they're like, I want to capture all the market's gains. I'll capture all the market's losses too. I don't care. But like think about it. For commoners, how many people would be like, yeah, I don't want 50%. All I want is like consistent returns. Like sure, I'm capped at 25. I don't care. Sign me up. But they don't get access to it, or like they don't know how to structure it themselves. Shit like that, right? Downside up to 10. Don't worry about it. Under 10, it's less than what the market's losing. Upwards, it's leveraged, but you're capped at 25. Like, you know what I'm saying? Like,
Yeah, it's a win-win either way. If
Right.
the market goes down, you're losing less than you
Right.
would have normally.
Like, the two downsides to that are you're capped, and the second is your money's locked up for a year. But, like, for most people,
a year isn't too bad.
if you're a commoner, or, like, for you and me, tell me you wouldn't put your money in that.
I want to put my money in this. Like, you should text me this
Right?
immediately. I
But
want
you
to do
can't.
this.
But
Why?
you can't.
Oh, because I don't have
Because
$50 million?
Yeah, because A, you don't have enough money, and B, I could structure it for you, or I can't. Like, I don't know enough about finance, or like that's not true. So it's more of like I don't have the connections, because you need to like use banks and like brokerage accounts, and like,
Yeah, you have to leverage
you
and
have
negotiate.
to like
yeah.
you it's more intricate than like let me go on like Fidelity and like buy a stock. Like you have to like set up structures, you have to like monitor it pretty closely. But like the point is like there's a lot of things in finance where like if you know enough and if you're like rich enough, it's not always, you don't always have to have both. You can have one or the other. But
You
like,
can just be rich enough to have a wealth manager that's smart enough.
right,
to...
I think in this case, the point I'm trying to make is more of like, if you increase your financial literacy, obviously this is way past the bar that we were talking about earlier, but if you get it past a certain bar, you can start doing things that make you money for like no fucking reason, but you make money anyways. And like it's like literally like the whole idea of like the gap between the wealthy and like the poor. and it's just like knowledge is part of it, right? Like
Yeah.
if you had the knowledge and you're poor, like you can make money in certain ways that are like completely nonsensical, but like you can't because you don't know.